Welcome to the Explainer. So, you're looking to buy a home in the Ocean State? That is super exciting. But as you probably already know, getting a home here in Rhode Island isn't just about finding that perfect property. It requires some seriously precise financial planning. Before you even start hitting up those open houses, you really need to understand why taking a highly localized approach to your financing is absolutely critical. Our main priority today is to show you exactly why using a Rhode Island-specific mortgage calculator is a totally essential first step, something you literally must do before making a purchase. Trust me, it is the ultimate tool to give you absolute confidence and clarity. Okay, let's dive right into our roadmap for today. We're going to break this complex topic down into 5 clear chapters: the Rhode Island pricing reality, decoding your monthly payment, customizing your loan scenarios, beware of hidden costs, and finally, choosing the perfect mortgage. This structured approach is going to completely eliminate that real estate anxiety for you. Starting with Section 1, the Rhode Island pricing reality, the local RI market. Let's talk about why relying on those generic national averages is actually incredibly dangerous for your budget. Ever thought about how a historic home in Providence compares to a coastal spot in Newport? Well, the costs are going to vary wildly depending on exactly where you buy in Rhode Island. Because of these super distinct local differences in property taxes and coastal insurance, using generic national average estimates will almost always lead to some really nasty budget surprises when you finally sit down to sign those papers. And this is exactly why you've got to ditch the pen and paper and use a digital Rhode Island-specific calculator. Trying to do this math manually, it's slow, it's limited to basic math, and frankly, there's a huge risk of making a mistake. A digital calculator, on the other hand, gives you instant, highly precise results that actually factor in those tricky local taxes and insurance rates we just talked about. Plus, it lets you do easy side-by-side scenario testing, putting you firmly in the driver's seat before you ever commit. Moving right along to Section 2, decoding your monthly payment. Decoding the numbers. Let's really build an understanding of what goes into that intimidating monthly mortgage payment. So your monthly payment is actually way more than just paying back the loan itself. It's all about PITI, which stands for principal, interest, taxes, and insurance. Sure, your payment includes the core loan amount you borrow and the interest the lender charges, but it also includes Rhode Island property taxes, which, by the way, can look very different in Providence compared to, say, South Kingstown, and your vital insurance policies, which run significantly higher if you're buying on the coast. Lenders typically bundle all this together in an escrow account, so calculating all 4 pieces together is really the only way to get a true, honest picture of your monthly obligations. Now, you're also going to want to understand your amortization schedule. Think of this as a highly detailed roadmap for your mortgage. When you first start making payments, the vast majority of your money goes straight toward the interest. But as time goes on, that balance magically shifts, and more of your money goes toward paying down the principal. Seeing the schedule shows you exactly when your payments start building real, tangible equity in your home, and it shows you how even tiny extra payments can drastically reduce your loan time. Which brings us to Section 3. Customizing your loan scenarios, testing scenarios. Let's look at how playing around with different numbers gives you total financial control. You'll want to run these exact 4 steps through your calculator to transform all those complex variables into a clear, manageable plan. First, type in the price of the house. Second, add your upfront down payment, since that dictates how much you actually need to borrow. Third, input the interest rate in your loan term, usually 15 or 30 years. Finally, check those generated monthly payment numbers carefully. A 15-year term gives you higher monthly payments but saves you a massive amount of interest over time, whereas a 30-year term offers lower monthly payments, which you might just need if you're looking in those pricier coastal areas. Now let's talk rates, because your interest rate is literally the biggest factor in your monthly housing costs. A fixed-rate mortgage gives you predictable, steady payments for the entire life of the loan, completely protecting you from rate increases. A variable-rate mortgage, or an ARM, might offer lower initial costs, but it changes with market trends, making it much riskier if rates suddenly spike. Unsurprisingly, most Rhode Island buyers prefer the safety and peace of mind of a fixed rate for steady, long-term budgeting. All right, on to Section 4, beware of hidden costs. Avoid surprises. These are the sneaky traps that catch so many buyers off guard if they skip using a comprehensive calculator. I absolutely love this quote from Dave Ramsey. A budget tells your money where to go instead of wondering where it went. It perfectly captures why we are doing all this math up front rather than waiting to be surprised. Preparation is the absolute key to peace of mind, and mapping out every hidden cost ensures you're telling your money exactly where it needs to go. Let's talk down payments. Your down payment percentage directly dictates whether you're going to be stuck with private mortgage insurance, or PMI. While putting 20% down is the gold standard and completely eliminates the need for PMI, market trends show many first-time buyers are actually putting down between 3 and 3.5%. These lower down payments trigger that PMI requirement, which has a noticeably higher impact on your monthly bottom line because lenders simply view the higher loan-to-value ratio as riskier. Okay, I want you to burn this number into your brain. 2 to 5%. You must budget this percentage of your total loan amount strictly for closing costs. And listen carefully, this is completely separate from your down payment. These costs pay for all the actual background work required to legally make you the owner of the home. So what exactly is in that 2 to 5%? Make sure your calculator accounts for these specific extras. You've got appraisal fees to verify the home's worth, title insurance to protect your ownership, origination charges from your lender, and state transfer taxes. Oh, and you have to heavily consider homeowners association, or HOA fees. If you're looking at condos in downtown Providence or Pawtucket, HOA fees can be super significant. They absolutely must be factored into your calculator to get a true picture of your finances. And finally, Section 5, choosing the perfect mortgage. Picking the right loan. Let's see how all your customized calculations help you choose the ultimate loan vehicle for your specific situation. Let's break down your main loan options. A conventional loan is usually best for folks with high credit scores and solid financial stability. Then you have FHA loans, which are backed by the government and are incredibly flexible, perfect for first-time buyers who might have smaller down payments or lower credit scores. And finally, VA loans offer incredible terms, like zero down payment and absolutely no PMI, for eligible veterans and active duty service members. So whether you have stellar credit or you've served our country, there is a specific loan type built just for you. Have you heard of the 28-36 rule? Financial experts swear by it. It means your monthly housing costs should not exceed 28% of your gross income. Using your calculator to ensure your PITI fits comfortably within this 28% threshold is basically the secret to keeping your budget healthy and your life stress-free. It leaves you actual breathing room to save for emergencies, home maintenance, and those inevitable future property tax increases. A local housing expert hit the nail on the head when they said, "Financial literacy is the foundation of successful homeownership. Always seek professional counsel to validate your digital estimates before making major commitments." Look, digital tools are incredible for planning, but local loan officers and housing counselors actually know Rhode Island's highly specific zoning laws, state programs, and tax benefits for seniors or veterans that you just might not find online. So I'm going to leave you with this final thought today. Are you ready to tell your money where to go before your Rhode Island dream home tells you? Seriously, don't wait to be surprised at the closing table. Take absolute control of your home buying journey right now. Fire up a Rhode Island mortgage calculator before you even start shopping. Run all your scenarios and step into homeownership with total financial confidence.